The broadcast is now starting. All attendees are in listen-only mode.
Hi, this is Sandy Vicani. I'm a supervisor here with Insurance Agency Marketing. So greatly appreciate everyone taking time out of their schedule to attend this webinar on this great Friday. I'm going to go through a couple introductory slides and then turn it over to a good friend of ours with Baltimore Life, Gary Voith. So let's get started here so we can hear what great things Baltimore has to offer. With IAMS, when you refer an agent to us, we just so greatly appreciate it. You entrusting that agent to us. We will give you, once that agent contracts, a $50 check for saying thank you. When that agent places business with us, we pay you the agent that referred over the new guy 20 basis points on each piece of business that that agent has placed with us, and that's indefinite. So as long as that agent continues to write and place business, you continue to get that 20 basis point check. That doesn't come out of your commission. It doesn't come out of their commission. That is, again, just a thank you to IAMS for entrusting us with that referral. What we do for everyone is put money in a marketing reimbursement account. So with every $100,000 of premium that you place with us, whether it's life, annuity, MedSup, combination thereof, we put $100 in a marketing reimbursement account. And what you can do with that money is help offset any business expenses that you have. So whether it's a new website, or if you have to get business cards, leads, seminars, submit that invoice to us. If the invoice is for $400, we pay 50% of that invoice, or up to what you have in that marketing reimbursement account. So we would cut you a check for $200. For all of our new producers, again, just to say thank you so much for choosing IAMS, we offer a new producer builder. So in your first 6 months of being with IAMS, if you place $100,000 of business with us, again, that's life premium, annuity, MedSup, long-term care, combination thereof, you can choose a 2-year subscription to a website that we create and manage for you, or you can choose a $750 cash bonus. If you want to wait and you think, gosh, I'm going to write more than 100,000 and you want to go to that $300,000 level, you can choose a $2,000 marketing reimbursement account. So we'll put $2,000 in that marketing reimbursement I just spoke about. You can choose a Social Security seminar program and 3,000 piece mailing, or you can choose a $1,500 gift card. If you think, geez, I'm going to wait because I know I'm just going to go gangbusters here and do $500,000 in my first 6 months, you can choose a 4,000 piece mailing and seminar system and coaching with a top producer of ours, Dave Pimper. You can choose a 5,000 piece mailing and seminar coaching with another great top producer of ours, Matt Gill. Or you can choose my favorite, which is the Ritz-Carlton Travel Rewards Getaway, where you plan your own travel package. And again, this is in your first 6 months as a way for us to say thank you so much for your business. We also have very strong back office support, so we want to help you work smarter and not harder. When you submit a piece of business to us, what we do is we scrub the application. We make sure there's nothing missing. We give you a call, get the missing information, and also send it to the carrier the same day. We touch that application every 3 days. We're looking to see if there's any changes, if there's any decision. What attention does that app need to make sure that it gets approved out the door and you're paid commission just as quickly as possible? We also do case design assistance. So if you're in need of help on a key man policy, a buy-sell, you just don't know what to do with this client's money, whether it's, put money into an annuity or a life policy, we run quotes, give you forms, set you up on paperless contracting. There's a lot that we offer on the backside with IAMS. So we don't want you just to contract with us and think that's all you can do. We want to make sure that you know we're here to help you and support you with every other thing, whether it's, again, life or annuities, or quotes, or applications. We also have a strong creative marketing department, and what they're able to do is help you design flyers. Actually, flowers would be beautiful, but flyers. They do postcards, newsletters. They do professionally written um, letters for you to send to your clients. If you have a logo and it's a little tired, we can create a new one for you. If you don't have one, again, we'll be happy to create one for you. Do brochures, business cards, online newsletters, which is really important. Tired website, or you don't have a website, we'll create and manage that for you. And what's really big right now is the social media. So we will help advertise on social media your company, just to make sure that your name is out there and you get as many calls as possible. Our website is, when you guys call us for a quote, this is where we go, is IM's website. It is such a great tool. Whether you're looking for those quotes, whether it's term or UL, whether you want to look at current annuity news, pull up the annuity grid, which shows top fixed annuities, top income rider annuities. We have a long-term care product grid. You can pull forms. It is always accessible. This is where you get into training, where you can pull up our old recorded webinars, or you can pull up our webinar schedule and take a look at what we're going to do and get registered. We also have a wealth management side, and I'm going to send out a poll question on this, and saying yes is just saying that you'd like more information on wealth management and how that DOL ruling is affecting the industry. So again, new rules came out with DOL on what will be acceptable and not acceptable. And when this first started, IMS thought it was really important to try to keep as much business with the agents as possible, which is why we created IMS Wealth Management. There's managed money fees, which is a recurring revenue to help increase your revenue. You're now able to offer a full range of products and services through IMS Wealth Management, and you're absolutely viewed differently by your clients as an advisor. You are now considered a fiduciary. So whether or not you're concerned on if you have to have a Series 65, if you don't, what the DOL ruling has done and impacted, selling life and annuities, do you need the PT 8424, all that great information. By checking yes to this poll, we'll get those answered for you. Hopefully it'll help you. You're more than welcome to ask any additional questions, but really we're just trying to get the information out so there's not any additional confusion. We also have a Life and Annuity Academy. We're just so proud of this. This is another poll question. By checking yes, you're just asking for additional information. We are industry recognized on this. This is an all expense paid trip. We cover all your airfare, lodging, meals. Again, industry recognized. We have close to 1,000 agents apply. We take between 35 and 40, and we go over all the different sales ideas and strategies from producers all over the United States. We unravel indexed annuities. We go over the current industry threats and trends, client objections. We go over seminar systems and what's the best ones to use, whether you want to use one in a library where you serve cookies and coffee, or whether you want a more elaborate seminar system. We go over wealth transfer and single premium life and infinite banking, the industry concepts, the current DOL ruling. There's just so much that we go over. Again, we pay for everything. Checking yes is just asking for additional information, and we would be happy to get that out for you. We also, in addition to everything that I've mentioned, we offer an additional incentive, and that's a trip here at IAM. So you can earn all of the great trips from the carriers, such as Baltimore Life, who I believe going to Aruba next year. When you put that money with Baltimore Life through IAMS, you're also earning a trip to us, which is the Ritz-Carlton. That is August 25th through the 29th of 2019 in Naples, Florida. The starting period, we give you lots of leniency on that. That starts January 1st, 2018 and goes all the way through June 30th of 2019. This is for you and a guest. And how to get there, you can do a combination of any of these, whether it's $3 million in placed annuity premium, $1.5 million in Medicare SUP. You can do 2.2 in single premium life, 250,000 in life target, or 600,000 in long-term care. Again, if you'd like to attend, the only way you're able to is to start submitting business through IAMS, and let us help you get that placed. So right now, I am going to turn it over to Gary Voith. And again, I can't stress enough what a great friend Baltimore Life is to us. Gary, if you want to take over.
Yes, good morning, Sandy. Thank you very, very much, and certainly reciprocal in terms of the relationship we've had with IAMS through the years. And you guys are certainly one of our leaders in terms of the asset transfer market and other products that you're selling with us. So thank you very much for the opportunity, and happy Friday. Wow, it's a sunny Friday back here in Maryland. Hopefully you're having great weather wherever you are. Today we're going to talk about our tax-efficient asset transfer program featuring our Generation Legacy and single premium whole life products. Both of these products are really designed with your senior clients in mind, who have what we like to call some leave behind money they don't necessarily need to live on, but they want to leave behind to create a legacy for their family and really do it in a tax efficient way. No matter whether you have funds coming from after tax cash assets, CDs, money market type funds, or annuities or qualified funds, we have a product solution for you. Another thing that we'll introduce to you today, and you've certainly probably seen it in email, is on Monday we introduced our new version of Generation Legacy, our qualified product, and that is for the spouse option. These are for spouses who have funding, but they maybe are not well enough to be the primary insurer, but they can provide funding for the life insurance on their spouse. So we'll talk about Generation Legacy, the spouse option, during today's session. So what about the marketplace? Absolutely huge, $1 to $3 trillion in wealth being transferred each and every year, and that's expected to continue to happen between now and the year 2052. We know that about 55% of your clients' wealth is moving on to their family members, and about 16% of your clients' wealth is moving on to the charities of their choice. But the question is, are they really maximizing the amount of money they're able to pass on, and are they really doing it in the most tax efficient way? Well, the first product we're going to talk about is Generation Legacy. This is a very popular product for us because it is really designed to take single premium funds that your client has in non-qualified deferred annuities and other qualified plan funds, such as 401ks, IRAs, 403bs, and the like, and move that money into a product program that will really allow them to increase their estate, do it tax efficiently, and really provide some benefits that we'll be talking about that I think you'll really like if you've never seen this product before. Issue ages for the product are 60 through age 80, and with a single application you're going to write for us, we're going to set up two products that we're issuing that work together as one: a single premium immediate annuity along with a limited premium payment whole life product. Both of these products will work together once issued and administered by Baltimore Life. Nothing for the agent special to do or the client has to do. It's going to provide all the benefits that we're going to be talking about today. Also, the same application we're talking about for the basic Generation Legacy on one insured will be the same application you would use for the Generation Legacy when you have a spouse who is funding the life product and the primary insured. So we'll talk about the spouse option, as I mentioned, in a moment. For this product, we have simplified underwriting. So any risk standard through Table 4, gender-specific rates, non-smoker or non-tobacco, tobacco will get a single rate for that simplified underwriting. And we'll talk about the point of sale underwriting approach we use to get you immediate underwriting decisions at point of sale. We'll also be talking about our accelerated death benefit rider, which truly can provide living benefits to your client at a time when it's needed most. So before I get into the details of Generation Legacy, as I've alluded to, Monday we introduced the Generation Legacy spouse option. And this was really asked for quite a bit by some of our leading producers because they would be in a situation where, you know, the single insured they were working with were insurable, but they didn't have the funding. But then their spouse, in fact, had funding, but they were not insurable. So their spouse had IRAs and they had other qualified funds annuities that they needed to start spending down and didn't need that money necessarily as income, but they needed to spend it down in some way. So we said, gee, what if we take the Generation Legacy product and have your primary insured, who's the healthy spouse, and have the annuitant, who is the unhealthy spouse, fund that life insurance product? And that's exactly what the Generation Legacy spouse option is. It's ideal for married couples. It needs to be a spouse relationship. So if the spouse who owns the funding can't qualify for life insurance, they're going to be the annuitant and the other spouse will be the life insured. The SPIA payouts will continue to fund the life policy if the annuitant dies. So even if that annuitant who might not have been in the best of health dies, the annuity that was set up, the SPIA, to fund the life product will continue to fund the life product. Also, when this is set up, that unhealthy annuitant does waive the right for the beneficiary to commute future SPIA payouts that are going to be used to fund the life insurance. They're going to waive the right to have that commuted to a lump sum. The whole reason this is set up is that the unhealthy spouse is going to help fund the life insurance for the healthy spouse. And that payment stream of either 7 or 10 years needs to continue to happen after it's set up. So what about Generation Legacy in the market? I mean, the qualified funds. It's about $2.7 trillion of in-force deferred annuities out there in the marketplace. About 65% of that money are in tax-qualified or employer-based plans. 35% are in non-qualified deferred annuities. Now, you know that, in fact, that 65% of those funds that are in qualified employer plans, many of those people are going to be rolling over pension funds, taking or cashing out, but they may not need all that money necessarily for income. So great opportunity to help them with IRAs and other distribution plans for those funds. Then you simply had that large market of non-qualified annuities out there that, again, people are using it as a growth vehicle. They want to defer the tax, but their plan maybe is never to take it as income. They need ways to transfer the funds effectively. Most of the people that set up these annuities do, in fact, just want to transfer funds to the next generation. And if they don't touch their qualified funds, of course, at 70.5, they are going to have a required minimum distribution kick in. Eventually, of course, when they die, if they've never used those funds or they didn't use all the funds up, they're going to pay tax, not them, but their survivor is going to pay tax on the gain on those funds when it's transferred to them. So, you know, if your plan is only to pass money to the next generation, is the annuity the best product to do it with? Or is there a more effective way to offer that to your clients? Well, we feel Generation Legacy is a more effective way. Let's conceptually think of how this product works. Generation Legacy, let's think of it as a gift your client's going to pass on to the next generation. And inside that gift box, you're going to help facilitate the transfer of funds from an annuity or qualified plan. With the writing of the single application again, we're going to issue two products, a single premium immediate annuity that will receive the transfer of the funds, along with a limited premium payment whole life product. Now, over a period of either 7 or 10 years, depending on the issue age of the client, Baltimore Life will make annual premium payments each year from the SPIA to pay premiums on the life product. Nothing for the agent to do or the client to do. We will take care of that. So what dictates the payment pattern? It's really the issue age. So if a client's 60 to 74, we'll issue a 10-year payout on the SPIA along with a 10-year limited premium payment life product. If the client's 75 to 80, a 7-year payout on the SPIA along with a 7-year paid-up life product. But here's where the benefits start to really get rich. What if your client were to die prematurely? What if they died during the period of time while the SPIA is funding the life insurance? Well, not only will your client's beneficiary will receive the income tax-free death benefit on the life product that was greater, of course, than the single premium paid, but their beneficiary will also receive the remaining payouts from the SPIA. So if 3 years were paid into a 10-year payment stream and they die, 7 more years of payments would be paid to that named beneficiary. Excellent benefit. Not too many options out there to offer you something like this. So I think this is really an attractive part of this product. At the end of the 7 or 10-year period, of course, the life product is now paid up. The SPIA goes away, it's done its job, the life product is fully paid up, and it continues to provide an income tax-free death benefit greater than single premium paid. It continues to build up cash on a tax-deferred basis. It continues to offer the accelerated death benefit rider that we'll be talking about. So let's just recap. The issue ages for Generation Legacy are 60 through 80. We base our pricing on current age or age at last birthday. Now this is really important because when you're dealing with transferring funds from other companies and products, that transfer process is going to take 20 to 35 days. And Baltimore Life will issue the policies based on the age your client is the day we receive the funds. Now, the minimum premium to get this started is only $5,000. How many clients out there that you're working with have multiple annuities, let's say, in multiple denominations, that their reasons they have multiple annuities is that, you know, each time they have a lump sum of money they're ready to put into an annuity at a new interest rate, they grab it and they go again. These are great people to talk to about transferring funds more effectively in a greater amount on a tax favorable basis. So the average premium, by the way, we see on this product is more like $60,000 to $65,000. So these are big ticket items. Maximum face amount for the single premium paid is $450,000. Now we do have 2 underwriting classes, non-tobacco and tobacco, and within those underwriting classes we will issue any risk standard through Table 4. Cash values on the product do accumulate on a non-participating basis. That's in the life product, of course. Partial surrenders. You can take partial surrenders from the life product after the life policy has become paid up, 7 or 10 years. Loans, though, are available from the life product at any time at a maximum interest rate of 8%. So now let's talk about that accelerated death benefit rider, because it truly can provide living benefits to your client at a time when it's needed most. It's certainly not a replacement for long-term care insurance, but it's certainly for those seniors that can't afford a good long-term care policy, provides significant benefits at certain critical health events. So there are 3 health event triggers that will allow you to accelerate the face amount of the life insurance policy. They are terminal illness, confinement to a qualified nursing home facility, and in situations of extended care, home health care, and adult daycare situations. You can accelerate this rider anytime after issue, and once accelerated, a lien for the amount of money that was taken will accumulate at an annual interest rate of 8%. We'll talk more about the lien approach in just a moment. The minimum that you can accelerate is $5,000. The maximum is $250,000. But here's the good news. This benefit is paid out once. It's paid out in a lump sum, and these are unrestricted funds. Client doesn't have to tell us or anybody else why they want the funds and how they're going to use the funds. They're unrestricted funds and how they use them, which is great. So now let's look at the definitions of these payouts and the percentages that the riders or the triggers would pay out. The first is terminal illness, and in this case, the client needs to be diagnosed as terminally ill with a life expectancy of 12 months or less to live. In this case, they could accelerate up to 75% of the face amount on the life product. The second rider covers qualified nursing and extended care. So for qualified nursing, they need to be chronically ill or diagnosed as chronically ill and confined to a qualified nursing home continuously for 90 days with an expectation that they're going to be there permanently. In this case, they can accelerate up to a maximum of 50%. For extended care, they need to be, again, chronically ill, been so for 90 days, but now they're requiring care provided either by a licensed home health care agency or a licensed or state certified adult daycare center. And here again, they can accelerate up to 50%. The key thing to remember is there are about 7 states that we have this rider that have different provisions for it, meaning like in Pennsylvania and Indiana, as you see there in the footnote, they can accelerate at 65% for terminal illness and 40% for qualified nursing and extended care. So take a look at your state approval charts, which can be found in our product toolkits on our agent websites, and it will give you any state-specific details. What do we mean by chronic illness? Well, there's 2 potential definitions. If the client satisfies either of these definitions, we consider them to be chronically ill. The first is they can't perform 2 out of 6 activities of daily living. Maybe they're okay on their ADLs, but they could be suffering from a severe organic mental illness, such as Alzheimer's or dementia. In either case, they would be considered chronically ill. So let's look at some quick examples of how this payout could work. Here's a client who has a face amount on the life product of $100,000. We're considering them terminally ill in this example, so they're going to maximize their accelerated benefit, getting a cash payment as a living benefit of $75,000. Now, we do deduct or charge a $100 service fee for that transaction, so the lien is established at $75,100. Now, if this client were to die immediately after getting that cash, no time for interest to accrue on the lien, the death benefit is calculated by taking the face amount less the lien, giving you a remaining death benefit of $24,900. But the more likely scenario is probably this one, and that is that they die 1 year after getting the cash. So they still got their cash up front as a living benefit, but 1 year later, the death benefit is the face amount less the lien, less the 1 year's worth of interest, giving you a remaining death benefit of $18,892. So in this example that I'm showing you, the client would have to live 4+ years in a terminal situation in order for the interest to outrun the remaining death benefit. Very, very unlikely, I think you would agree, that that would happen. So could these riders, this accelerated death benefit riders, could they terminate? Technically, they could. Here's how. You could stop the whole life policy. You're thinking, hold it, the SPIA is funding the whole life. It's happening automatically. How would the life policy stop? Well, the client could come to you 2 years into a 10-year payment stream and say, remember that $100,000 I gave you and I didn't think I'd need it for living? I do need as much of it back as possible. So now you would have to cash out the life policy that would have very little cash value at that point and take the remaining payments from the SPIA and have them paid out over the next 8 years. That's probably not a good thing for the client, but sometimes this could happen. In that case, the rider would end. If the client dies, we pay a death benefit instead. And finally, what if you accelerate, let's say under the nursing home provision at 50%? That's it. You can't accelerate a second time. The riders stop once we pay out one payment. Now, what if the client, as I tried to illustrate earlier verbally, outlives the remaining death benefit, meaning that the interest exceeds the remaining death benefit because they're terminal and they live 4+ years. That is a situation that could potentially happen, very unlikely, but the whole life policy would end, and so would the riders. We do have a provision there that if the owner wanted to repay all or part of the lien at any time, it would keep this product qualified as a life product. So what if, what if the policy had a loan on it, all right? If you have a loan, you can't accelerate, or vice versa. If you accelerate, you can't have a loan. The key thing to remember is that benefits under this rider technically may be considered taxable, not usually, but may. So please make sure you consider, telling your client to consult with their tax advisor. Our rider is no different than any other rider out there in the industry regarding this. So let's look at a quick example. This is the client, female, 70, non-tobacco, who's got 50 grand, let's say, sitting in annuity, and they have no plans of using that money as income. They want to pass it along. We're going to issue a life policy for them of $78,000, nearly $451. Look at these payouts, though, for the accelerated death benefit rider. I mean, these are real cash figures to a senior at end of life who can't afford long-term care insurance and in fact could use this cash for whatever reason they'd like to have it, maybe take a world trip. But at the end of the day, this is cash they can have in hand and still have a remaining death benefit under this rider. So what's another tax efficiency of this program? Well, we feel it really is in terms of the transfer of the funds. You could be transferring funds from an IRA that's never seen tax before, or you could be transferring funds from an annuity where there's a basis and a gain. But eventually, Uncle Sam is going to get paid tax on that gain. The beauty of this product is that when you roll money from the annuity or the qualified plan into the SPIA portion of this product, because that's where it goes, you're basically going to be moving that money to a qualified SPIA that's going to fund life insurance. And as a result, you're able to spread out for the client the tax on the gain of that money you're rolling over for the 7 or 10 year period that we're going to use it to pay life insurance premium. Now, your client will, in fact, get a 1099 each year on that gain for the funds that were rolled over. Again, Uncle Sam has to get paid. But the nice thing is here, we are able to spread the tax out for them. Now, the other nice thing is you don't have to worry about RMD calculations. The SPIA payment we make each year to the life product does satisfy the RMD rule. The other thing to remember is that at death, as I mentioned, the life insurance is always there to be paid income tax free. But what about the remaining payments from the SPIA? Those remaining payments would be taxable based on the portion of the funds that had not been taxed before. So if it's IRA money, all of it's taxable from the SPIA payout. If it is an annuity money, you have a basis and a gain. Our default method on paying out those remaining payments from the SPIA are annual payments. So if there's 7 years left, we pay out 7 more years. Or the client's beneficiary could say, you know what, I want to commuted lump sum of the funds. We would pay them a lesser commuted lump sum. In either case, the Benny will get a 1099 on the SPIA funds, the portion of which are taxable. One more thing on tax. We have to ask the question because we're dealing with qualified funds on our app. But, the question's going to be, do you want tax withheld from the money you're rolling over? We have to ask that question, but we cannot accept funds if the client wants to do withholding of tax from the funds they're rolling over. The product does not work if you set it up that way. So please make sure you check the box on the app that you do not want tax withheld from the annuity that you're rolling over. So here are some examples. 65-year-old non-tobacco user who's got 50 grand. Because they're 65, we issue a 10-year payout on the SPIA along with the 10-year paid-up life product. For the male, the face amount would be $77,361 and change. For the female, the face is $87,031 and change. So what did you just do for this female 65? Well, you've increased her estate at issue by over $37,000. Not forgetting that if she dies in the first 10 years, the remaining payments from the SPIA, of course, would also be paid to her named beneficiary. Now, what if she says to you, well, Sandy, what if I left the money in the annuity? I'm making 3%, I'm in a 25% marginal tax bracket. Wouldn't I be better off? Well, it would take her over 19 years in order to accumulate that $87,000+ that would have been paid out from the life product. Always remember that life product death benefit is paid out income tax free. What about the 75-year-old, little older, shorter life expectancy? The numbers still look pretty good, don't they? So because this client's 75, that same $50,000, we're going to issue a 7-year payout on the SPIA, along with the 7-year paid-up life product. For the male, the face amount would be $61,516 and change. For the female, the face is $67,000, nearly $9. So even at 75, for the lady who has this annuity saying, I just want to pass it to my grandkids, she's going to see an immediate increase in her estate value by over $17,000. For the gentleman, nearly $12,000, knowing that if they die in that first, 7 years, the remaining payments from the annuity are also paid. I've been marketing this product for Baltimore Life ever since its inception back, probably around 2010 or 11 we started, and clients love it. Agents love it. And I'll tell you this, when you sell it, you're going to find that the clients who are buying especially are going to give you referrals, especially if you're asking for them, because it's good news. They always want to pass on good news, and it's a great way to be able to get referrals by showing them such a great and gratifying concept that's going to benefit them and their family or maybe favorite charities. Okay, this is a ledger that I want you to see because this ledger can be is part of our proposal software. So you can go onto our agent portal, get our proposal software, and generate a proposal for this product. It is a non-illustrated product, meaning a signed illustration is not needed, but it's available. You can also generate a proposal like this type of a ledger right on your smartphone or smart tablet using our MobileLink software. So for female, 70, non-tobacco, she's got a $50,000 annuity with a cost basis of $40,000. You see here in this ledger in column 3, the $50,000 going in. Out of that payment of $50 grand, the SPIA payout is going to be $5,570 a year that's going to fund the life insurance. Out of that payment, nearly $4,000 of it is excluded from tax. And based on the interest factor over 10 years, the estimated taxable income is about $1,571. That's what she's going to get the 1099 on. So it's very important that she sees that up front. Of course, the death benefit, $78,451, income tax free. And of course, the next to last column shows the commuted lump sum of the SPIA payouts if the client were to die early. Great way for the client, once they understand the concept of generation legacy, shows them the numbers and how it applies to them. What about the application and forms? We try to make this simple. You go to our agent website, you go to our application and forms package, answer a couple of quick questions, and it will automatically produce for you the forms that you need, okay? That's the key thing. It'll automatically produce for you the forms that you need. The key thing to remember is that if we have that new application for Generation Legacy, that's with the app that we're using for the spouse version. So please note the same app that you're using for the basic Generation Legacy with one person that you're insuring and becoming the annuitant is the same app you would use if you did the spouse version with 2 lives. All right, on that agent website we talked about, we have a lot of other things in our product toolkit for Generation Legacy. Our agent guide, proposal software, client brochures, scripts, letters, phone approaches. So take a look at that. I'll try to show you a few of these things before we end the session today. So now let's talk about the second product. This is single premium whole life. This product really has a lot of similarities but differences. I'm going to try to point out for you quickly some of the differences. The first of which is the source of funds. This product will take premium funds from after-tax cash vehicles, CDs, mutual funds, money market accounts, that type of thing, after-tax cash funds. These are funds, of course, not needed for daily living, and it has the same goal, helping the client increase their estate value in a tax-efficient way. Here's another difference. It's the issue age. Because we're working with after-tax cash funds, the issue ages are 50 to 85. Another difference is the width or the breadth of our underwriting offering. We have 2 tiers of underwriting getting you through Table 8. We'll talk about that. And then finally, we offer that accelerated death benefit rider with the same 3 health event triggers we talked about for Generation Legacy, but this rider gives you a little bit more flexibility in how you can accelerate the payment, and I'll talk about that difference. So 50 to 85 is the issue age. 2 tiers of underwriting. So you have the same standard through Table 4 you have with Generation Legacy, but with this product you have a second tier, Tables 5 through 8. Both tiers, non-tobacco and tobacco, are available. Minimum premium is $5,000. Now, how many people that you work with doing good fact finds on have multiple CDs, money market accounts, mutual funds, where their only goal with some of these are to pass that money along to the next generation? Lots of that is going on. Most seniors do compartmentalize their funds. You know, I've got 5 CDs set up for my grandkids for their college fund. Those are perfect people to go to for this product. The average premium, by the way, we see on this is about $30,000 to $35,000. Now, I will tell you, what about this concept? What about when you go out to a senior and you're trying to sell them some basic, small face amount life insurance, they say to you, Sandy, I really don't need life insurance. I have a burial account set up. Well, that means one of two things. They either have a pre-arrangement at the local funeral home, or they have a CD sitting at the local bank that their kids know that's the money set aside to bury mom and dad. Well, here's how that role play might go with a 70-year-old female. Mrs. Jones, you're 70. You're going to live many more years. I'm sure you would agree costs are going to go up. What if I was able to show you a way to take that $15,000 you have in the CD at the bank and provide your family with nearly a $25,000 income tax-free death benefit? Oh, by the way, if you became terminal in a nursing home or an extended care situation, you can actually get at some of that cash as a living benefit for whatever reason you need it, and we could still set it up that you still have remaining life insurance benefits. Would that be something you would have an interest in? So taking that $15,000 and now making nearly a $25,000 income tax-free death benefit. That's called the burial account concept, and I can't tell you how many agents get started selling this single premium product in that way, and then understand quickly that the way to sell big in the asset transfer market is by doing good fact finds. Not only finding money, but finding what the goal of the money is. What's the maximum face amount that we offer on this product is expressed in terms of the maximum net amount at risk. That's really the difference between the face amount that we issue and the premium paid. Based on specific ages and underwriting levels, these are our maximum net amount at risk. Our software will not allow you to violate those rules. Cash values, they do accumulate on a non-participating basis in the life product, but here's another nice wrinkle. Partial surrenders, because we're working with after-tax cash funds, you can take partial surrenders from this product starting in policy year 2 within limits. 10% policy year 2, 20% year 3, 40% year 4, 40% year 5, and from the 6th year on, 100% of the available cash value can be taken as a partial surrender. Loans are available at any time. Not sure you would do a loan when you have great partial surrender capabilities. Accelerated death benefit riders. Same 3 health event triggers we talked about before. Same definitions to qualify. Same idea that if you get an accelerated payout, it's paid out once, it's paid out in a lump sum, and these are unrestricted funds. Here's the difference. If the client says, you know what, I have no need for life insurance anymore, give me as much benefit or cash as I can get, we call that a full acceleration. I'll show you how that works. Or they may say, you know, at that $100,000 face amount that I have, I want to keep $25,000 in life insurance over here paid up and accelerate the other $75,000. That's called a partial acceleration. We can do that, and I'll show you how that works. So for terminal illness, it's the same definition to qualify, but if they want to do a full acceleration, they can say, give me 95% of the face amount, and we're going to deduct the $250 admin charge. That's possible. For nursing home confinement, same definition to qualify, but because they're going to live a little longer, the maximum acceleration is 90% less the $250 charge. And finally, for extended care, home health care, and adult daycare, because they're going to live longer yet, the maximum accelerated on a full acceleration amount is 80% less the $250 charge. Now, under all these examples, they could do a partial acceleration. So in this example on the screen, 100,000 face amount, they could take 25,000 paid up, take the other 75,000 a face, and accelerate it 80% less the $250 charge. Any way they'd like to slice it, we can do it. If you're new to an accelerated death benefit rider and you're thinking to yourself, why does it go from, goes from what? 95% to 90 to 80%. Why does that happen? Because there's a cost for accelerating cash in advance. If we're going to pay out, or any company like us is going to pay out cash in advance of death, there's a cost for doing that. They're factoring it in one way or the other. And if the client's going to live longer, let's say an extended care situation, that cost for accelerating is higher than if you're going to be terminal. So that's a quick explanation of what the percentages mean and why. Same definition for chronic illness I gave you. Now here are the examples. So here is the 65-year-old. It's got 50 grand sitting in a CD. And they're saying, I just want to pass that money to my grandkids anyway. Can I do it a little bit better? Well, sure they can. At level 1 underwriting, that male is going to get a face amount of nearly $82,000. The female at that same underwriting level will get a face amount of nearly $93,000. But don't forget, with this product, you have a second tier of underwriting, tables 5 through table 8. That difference between level 1 underwriting and level 2 at all ages and genders is only about $5,000 to $6,000 less in face. Not a bad reduction to get that extra bonus of that extra underwriting level, ensuring some risk that we normally wouldn't. So with that, what have you just done for this lady who's just sitting on money, what, at the bank making less than 1% in interest, getting a 1099 each year on it? You've increased the value of her estate by nearly $43,000 at issue. If she were in a 25% tax bracket, even making 3% interest on her money, it would take her 28 years just to match what you've increased her estate by, knowing that the nearly $93,000 of life insurance benefit will be there to be paid income tax free. Here's the 70-year-old, little older, shorter life expectancy, but the numbers look really still very, very good. So at 50 grand at 70, the male would get a face amount of nearly 74 grand, the female a face amount of just over 82,000. And again, that second tier of underwriting is about $5,000 to $6,000 less. So this lady at 70 increases her estate by over $32,000. You come up looking like a hero. Your clients love it. They're going to refer you once you ask for those referrals. So please do that early and often. The forms, same story. Go to our app package, get all the forms that you need. We still have great marketing materials out there. By the way, your friends at IMES, our friends at IMES, do a great job in helping you not only find opportunities for this, but work you through this to make sure you get the proposals you need if you're unfamiliar, get the forms you need if you're unfamiliar, your first case, but they're always there for you. So make sure you lean heavy on them. They're a leader for us in this product. So what about point of sale underwriting? Because this is really the icing on the cake. We've got a great product, extremely competitive. Talk to IMES about the comp. I think you're going to love it. But, you know, what about the fact of saying that I work so hard to get in the door, I work so hard to get the case, now I got to wait for underwriting. Well, no, you don't. Once you complete the app, you pick up the phone, you call our call center with your client there, and in 12 minutes or less, we're going to complete an interview with your client and make an underwriting decision well over 90% of the time on the spot. We're basically going to review with your client the same health questions you're completing on the paper app and you're going to submit to us. But when we ask those questions over the phone, we get your client's permission to pull the data we need to look at right away from the MIB and the prescription drug database history. That way we're able to do live underwriting on the spot and make those immediate underwriting decisions in most all cases. Now, after the interview is done, we never give the interview results to your client. We're going to give them to you, the agent, because oftentimes these interviews are being done without you present. You might have to schedule this interview a couple of days away. So that's fine, but we're always going to give you the underwriting decision. You're the one that's going to be communicating it to your client. Now, once you finish with the underwriting interview, ESP, Elite Sales Processing, will give you a confirmation number for you to write that on the paper app that you're going to submit with us. Once you finish the appointment, make sure you send us all the forms. That's very important, obviously. And all these details about this interview, how to do it, the phone number, the hours, it's all in your app package. You see the phone number there on the screen. You see the hours on the screen. Now, we do support both English and Spanish languages. Other languages are available upon request. We do have TTY services in English and Spanish. Please know, though, that this interview must be completed in 5 business days in order for us to complete your app, all right? So please make sure you remember that. Now, you may say to me, well, Gary, what if I write business on a Saturday? What if I write business after your hours of your call center? What do I do? It really doesn't matter. If you're not able to call during business hours, that's fine. All you need to do is when you finish that appointment, let's say on a Saturday, pick up the phone, call our call center, and when you get the voice cue, leave your name and number, your client's name and number, and a date and time you want us to call them to complete this interview. We will call them at that time, complete the interview, and again, not give them the underwriting decision, but call you, the agent, back with the underwriting decision that you will communicate to the client. All right, so that's very important. Now, if you're on the phone with the client, they're going to give you the underwriting decision because you, the agent, are there with them. But in fact, they're not going to give that directly to the client. They need to give it to you so you can call your client. So how do you pre-qualify the application? We have an app for each product, and the reason we do is that for Generation Legacy, we have one tier or level of underwriting. So as a result, we have one section of medical questions, a Part A. Think of the Part A questions as knockouts. If you get a yes in Part A, it means you don't qualify through 4 tables. If you get all no, height and weight looks good, MIB and drug history look good, we're going to issue. For single premium whole life, because we have 2 tiers of underwriting, standard through Table 4, Table 5 through Table 8, we have 2 parts of medical questions. Still think of your Part A questions as knockouts. If you get a yes in Part A, it means your client does not qualify through 8 tables of underwriting. But if you're all no in Part A and B, everything else looks good, we're issuing Tier 1. If you're all no in Part A, but 1 yes in Part B with everything else there looking good, we're going to issue Tier 2. So that is the quick product overview. What I want to do in our remaining time, if I can, it looks like we've got 10 minutes or less, and I'm going to jump into a quick presentation on some of the marketing support. So as I mentioned, IMES is your hub for marketing support, absolutely. But I've been talking about going to our agent website to get your forms and other marketing materials, all that type of stuff. Here's the agent website. And if you haven't been to our site before, great site. We have product toolkits set up for every product you're contracted for with us. And this happens to be our Generation Legacy toolkit, or a screenshot of it. In that toolkit, you'll find all the stuff you need, including on-demand training, product-related announcements, all your forms, and more importantly, your application and forms package we talked about to get your forms, your state approval charts, a link to your illustration software, instructions for how to activate mobile link on your phone. We'll talk about that in a second. We have a downloadable point of sale presentation piece called Secure Solution Presenter. All that's out there for you. So let's talk about the first one. It's very important. It's mobile link. This is the one you want to use right away, because even if you don't have an agent guide for this product, if you get the mobile link, you got an agent guide in your hand. So you go to mobile.baltlife.com. Once you get there, this is a web address, and if you're on your smartphone, hit the shortcut on your phone that allows you to save that site address. It'll pop a shortcut right on your phone itself. Then you can open it just like any other app. But once you're in Mobile Link, you basically have a agent guide in the palm of your hand. You've got the product information, the underwriting guidelines, and a rate and value calculator. Sometime in the next week, by the way, that center screen in white, which is Mobile Link's homepage, is going to change a little bit. We've got a little more user-friendly, prettier site that we're going to be putting up there for you. Same functionality, just a little prettier site to work with. So go to mobile.baltlife.com. That ledger I showed you earlier in the presentation today, you can produce that right on your phone. I can't tell you how many agents never get into doing a full proposal. They just do everything right on their phone, whether it's single premium whole life or Generation Legacy. And these are non-illustrated products, so you can go right to an app and never need the ledger. We also have a tool that you can download called Secure Solution Presenter. It basically is a point-of-sale presentation tool. It'll allow you to make great point-of-sale presentations talking about the concept of asset transfer, who it benefits, key dialoguing questions for your interview, features and benefits of the product, and all that is out there for you. So this is just a couple of screenshots from those presentations. Great pieces to make sure that your client understands the basic concept of the product before you get into showing proposals and illustrations. All right, let me jump down here real quick in my slide deck and get to the next thing I wanted to show you, and that is the asset transfer analysis form. I told you that the fact finding is so critically important to success in this market, right? So the asset transfer analysis form is another tool if you don't have a good fact finding tool to help you do that. The center of the form will allow you to record the client's current assets, CDs, money markets, mutual funds, annuities, and so forth. On the right side of that center section, you can show them that they take a portion of those funds not needed for living and move it into one of our appropriate products, the impact that'll make on their estate value. The bottom of the form allows you to record their current monthly income. You want to make sure they've got enough income now and going forward before you start dabbling with their funds. The top of the form gets into those key dialoguing questions. That's how you really probe to determine what the intent of the client's money is. For example, Mrs. Jones, do you have money that you'd like to leave behind for your family or favorite charities that's really not needed for your daily living? Well, most people get the leave behind money concept, but if they don't, it's going to create a great conversation to help you find funds and find intent of funds. There's another document out there on our product toolkit called Single Premium Sales Ideas. It's in both the Generation Legacy and Single Premium Whole Life Product Toolkit. And it really, once you start reading this document, and this is just the highlights of it, it will start generating in your mind people that you can immediately go out and see. What about all those annuity clients who have money in annuities that they have no plans of ever using it for income? Great prospects for Generation Legacy. What about the people that have some of those older paid up life policies that, the cash values are close to equaling the death benefits? You can 1035 exchange those if you have at least $5,000 in cash value into a single premium life product and get a greater death benefit. What about some of the old ULs that need help because the cash values are imploding? Again, if you have at least $5,000 in cash value, you can 1035 those into single premium whole life. We talked about the burial account concept in my role play earlier. Great way to get started selling these products. And there's a bunch of other great ideas out there in our single premium sales idea document on the agent portal. We also have these customizable marketing flyers. We have different varieties of these. They explain the concept of asset transfer, features and benefits of a solution, and then you can customize the bottom of the form with your contact information. Use them as mail stuffers, use them as an event flyer, use them as leave behind pieces. Great tools to help you. We have print ads out there for your use. We have letters, phone approaches, we have white papers and third-party articles. All that stuff, again, can be found out on our agent website inside of the product toolkits. Now, the one thing I want to mention to you before I hand it back over to Sandy is we've got a great trip, and I don't have it in this slide deck because I'm working from home today, but our trip this year, my gosh, IAMS trips are incredible. And if you qualify for the IAMS trip, writing our business, you're going to qualify more than likely for our trip, because for $600,000 in single premium life business, one of these two products I'm talking to you about today, you're going to qualify for a great trip to Aruba. You and a guest, all expenses paid, and that's at a Marriott property and casino in Aruba next June. So the great thing about our trips, very reasonable amount to qualify at $600,000. And the other thing, it's all about fun. We don't get into business meetings. It's all about a fun trip for you and a guest, all expenses paid. So take a look on our agent website about the Aruba trip. And again, thank you so much to everything you're doing out there to help bring business to Baltimore Life. We know you have choices, and we appreciate you considering Baltimore Life and, of course, IAMS for your business. Thanks so much, Sandy. It's back to you.
All right, thank you so much. So I just want to make sure that anyone has any questions. I put out another poll question, and that's if you'd like to get some additional information on contracting with, again, our friend with Baltimore Life. Can't stress enough, great job that they do. You have contact to their new business people. There's never a time when they are not accessible. So please check yes for contracting. Let's take a look at any questions that anyone has. Again, immediate decision on the phone. Nursing care, home health care benefits automatically built in. Never exams or labs. Great commission to you as the agent, as we'll talk about on an individual basis. So at this point, I want everyone to know that this webinar is recorded. Everyone will receive a recorded version of this. You'll have that later on today. If you have questions in the meantime, of course, please give me a call at 1-800-255-5055. My name is Sandy Vacanti. I'm a supervisor here at Producer Services. I oversee all of our single premium life, and I can tell you Baltimore is a great company to have in your back pocket. So thank you, everyone, again. Thank you, Gary. Just so appreciate your time. I hope everyone has a safe weekend, and bye-bye.